Alright, today is Tuesday, October 27th, and this is a review for the stock market activities today. Here is the agenda of the day, and we do have a lot of earnings to cover, so we will keep the headlines short and sweet, and we will do the same for the charts analysis because we did not have any significant developments today. With that being said, here we go. The diamonds in the red by 222.21 points. They could have made it 222.22 points. That would have been a lot cooler, but we will take what we have. A decline of 0.80%. The Nasdaq is the outperformer today, managing to close in the green by 72.41 points, or a gain of 0.64%. The S&P 500 in the red by 10.29 points, or a decline of 0.30%. Which sectors led the day? At number 1, and the gold medal goes to consumers, cyclicals, and the silver for communication services, and the bronze goes to technology. You see the risk-on mood today. Because what led the laggards of the day? Industrials, followed by financials and energy. Moving on to review the futures market's activities. And right away you saw a rebound in oil. Crude was up today, about 2% or so. However, we did not see energy stocks reacting to the bounce. What's going on with softs? We see declines in coca and lumber. However, OJ managed to close in the green. Metals, muted action in metals. Gold is not moving at all, it's just staying where it is. Marginal gains for platinum and a decline for palladium. Meats, lean hogs, not doing anything today, yet feeder cattle building on the gains from yesterday. What about grains? Red day for the majority of the futures here. The declines are led by soybean meal, canola, and soybean oil. Lots of volatility in grains expected due to the elections. Moving on to the big casino, the options market, and right away we see the most active options here led by Apple per usual with about 1 million contracts. 65% of those were calls. The volume is notably weaker than the last few weeks. You see that the gambling activities subsiding just a little bit. AMD at number 2. With about 800,000 contracts traded today, about 73% of those were calls. AMD had earnings today. We will cover the results in the headlines segment. Microsoft also reported today, and we will cover that in the headlines segment as well. With 543,000 contracts traded today, about 67% of those were calls. What trade led the volume today? It is the 2 or 28 calls for NEO, scoring about 66,000 contracts today. Very interesting action here because we usually see Apple leading the volume, but as you can see, the casino is not so hot today, and NEO managed to capture the most traded volume in the market today. What about the change in open interest? Starting with the increase, right away you see a lot of trades that don't make sense on paper for next year, buying calls deep in the money like the $60 call in Tesla. These are professional firms that does a lot of trading with options, and they have special programs that measures the price, and they see an opportunity in a certain option trade. They take it, they dump it a day later, so will not pay attention to any of that. But the notable activity here, I see Intel, they're buying the 50 calls expiring next month in November. And I also see the 34 puts in United Airlines, their opening contracts expiring this week. So perhaps we'll see further declines in the airlines sector all the way to the end of the week. And now to the decrease of open interest. Which trades are being closed in the options market? Right away you see that the volume in the contracts changed, not very significant here, but it is notable that they are taking chips off the table from the $7 put in American Airlines and the 130 calls in Disney expiring this week. So this is a trade that did not work probably not gonna work. They're just taking the losses off the table. Whatever left is being taken away. And you see notable activities in Uber, closing the 45 calls expiring next year and the 40 calls expiring next month. And at the bottom of the table there, you see that they're also closing the 35.5 calls expiring this week. So we're seeing bearish activities here in Uber, and I expect further declines all the way until the elections, until we see the results of Proposition 22 in California. And here are some interesting trades for you that took place during the day. Number one, buying the 10.5 puts for American Airlines expiring next month. Again, lots of bearish activities on American Airlines, the weakest name in the airline sector, and it is very threatened by bankruptcies very soon. We see some action here in Microsoft, very interesting, specifically given the fact that Microsoft reported earnings after the bell. And this trade, buying the put 192.5 expiring next week, and the 240 calls also expiring next week. It is the same trade, and you can interpret this trade in many ways, but since the delta spread is so high, my assumption here is that they're betting on Microsoft to stay flat, and therefore they're selling puts and calls 10% or so from the current price. We'll see how that works. We have another trade for American Airlines, buying the $9 put expiring also next week. And I also see an interesting trade here in Tesla, buying the 447.5 calls expiring October 30th. And we do have Wynn Resorts buying the 65 puts expiring next week. Initially, we saw bullish bids for Wynn and the entire Las Vegas casino sector after the results from Las Vegas Sands. We do have news from Las Vegas Sands that could be interpreted as very bearish news for the casino industry in Las Vegas. And you see the bearish bets starting to creep in on names like Wynn Resorts, Caesars, and even MGM. Moving on to the headlines that shaped the day. Starting with consumer confidence, we got the numbers this morning, and we saw the consumer confidence index slipping by a little bit. And when you look at the details, when the participants are asked, what do you think about the current economic conditions? You saw the confidence risen by a little bit. However, and here is the catch and the most interesting finding here, when participants are asked, are you confident in the economic conditions for the next 6 months? They are not as confident as they are right now. That is, of course, the impact of the upcoming elections and the rise of coronavirus cases globally. And here is the chart showing you that consumer confidence and consumer sentiment been stagnant since the crisis hit. We're not seeing a significant rise in confidence, and the longer we are in the crisis, we risk that confidence will dip even lower. And here is the piece of news that I was talking about earlier in the coverage of the options market. The Las Vegas Sands company is exploring selling their assets in Las Vegas for about $6 billion. And the goal here is to concentrate their portfolio operations in Asia, in Singapore, and Macau. This is very bad news for Las Vegas because you have the best operating company in the strip bailing out, saying that we are not even interested in staying in Las Vegas and we don't see a recovery happening anytime soon. And I don't blame them, because the incompetency of our politicians and leaders will destroy the entire city of Las Vegas. We've been spending billions of bucks to fight the coronavirus crisis. And the approach here was to dump billions of dollars in the development of vaccines, assuming that the moment we have a vaccine against the virus, business will go back to normal. This is a fallacy, and it will not help the city of Las Vegas. This city will be destroyed completely. And here's why. Say we are in 2030 right now, and we are way past coronavirus and the entire crisis, and you're looking back at 2020, you would say you guys are stupid because you wasted your time and your money trying to develop the vaccine instead of testing. The problem with the vaccine is it doesn't help the city of Las Vegas or the airline sector or any sector in the economy, including restaurants, hotels, etc. Because let's say you are Las Vegas Sands and the vaccine is already out and about. How would you verify that the person entering your property is vaccinated or not? Number one. Number two, it will take a lot of time until the population is vaccinated, assuming that everybody will comply and take the vaccine. The third point, and you will see in a little bit, that the vaccine and the antibodies only last for a short period of time, meaning that even if you recover from the virus naturally, your antibodies would disappear in a matter of months and you will be susceptible of being reinfected with the virus. What would have helped the airlines and the casino industry and all the traveling sector is proper testing, rapid testing on the spot. You walk into the property of, say, the Wynn or Las Vegas Sands, the Venetian, Palazzo, whatever it is, and right before you enter the property, you spit in a tube or they swap you, or whatever mechanism it is. In 5 to 15 minutes, you got the results, they put a bracelet on you, that you're safe, and you enter the property. That is much better approach than the vaccines, where we don't get any verifications whether the person is vaccinated or not. And in the case of Las Vegas, which depends on tourism, how would you verify that a tourist from China or Australia or whatever country it is or whatever state it is vaccinated or not? That is not just my take, by the way. Here's a headline from Bloomberg saying that the White House strategy of relying on vaccines and treatments rather than social distancing, masks, and testing risks pushing the return to quote-unquote normal all the way to 2023. How do you expect airlines, casinos, cruises to survive all the way to 2023? Are we gonna pour in $2 trillion in stimulus every 6 months or so and keep propping these zombie companies? The concentration on vaccines is the biggest mistake by far in the approach of the government in battling COVID-19. We should have spent the resources on testing instead. But don't expect your beloved politicians to figure this one out, because all they did here is funneling taxpayer money to their sponsors, the pharmaceutical companies who are assigned to develop the vaccine. The swamp goes on. And by the way, here is the headline that shows that the antibodies decline after the infection, raising questions about herd immunity and raising questions about the vaccine approach altogether. And by the way, if you're looking for some vaccine optimism, try looking somewhere else, because we now know that the Pfizer vaccine that was much anticipated to be approved by the FDA is now delayed and expected to enter the process after the elections. And here we have Fauci saying that the early COVID-19 vaccines will only prevent symptoms but will not block the virus. So what is the point here? And how the hell are we gonna keep these zombie industries alive for longer? The casino industry will be completely destroyed. So will the airlines industry, the hotels industry, the restaurants all over the country. Small businesses will be destroyed forever because the incompetency of your beloved elected leaders. And the last bit of coronavirus news here, we're seeing the hoarding and stockpiling of groceries and necessities skyrocketing again. You know that would be good news for names such as Kroger, Costco, Walmart, Procter & Gamble, etc. And here is the last bit of news we're gonna cover before dipping into reviewing earnings. Hedge fund manager David sent a letter to his investors saying that we are in an enormous tech bubble. This is what we've been saying in this channel all along. The similarities between the 1999 bubble and the 2020 bubble are astonishing, specifically from an investor's sentiment, viewpoint, and the psychology of the gambling mentality that we saw back in 99. We're seeing again the same mentality of gambling and speculation, only this time around it is on steroids. The action that we saw in the options market back in August and even September is unprecedented. You've never seen the stock market moving solely based on the action of the options market. So keep the casino going. The casinos in Vegas are about to disappear, but the big casino on Wall Street is alive and thriving. Moving on to cover and review some headlines, or rather earnings. We already covered the headlines. Let's talk about the earnings we had today. Here is the earnings schedule. We will take a look at these names individually, starting with Caterpillar. Right away in the morning, you saw the stock of Caterpillar declining. So let's take a look at their results and figure out why. When you look at their results quarter over quarter, their sales and revenues are pretty much the same, but their margins are getting better, much better. So that is the glass half full of the picture. Here is the problem. When you look at the picture, year over year, Caterpillar is still in the hole, still declining, and in certain cases they're down 50% year over year, 50% or more year over year in their key performance metrics. Combine that with the fact that the stock ran really hot recently, the last few months, and it is not a surprise that this stock traded in the red today, and perhaps we will see more pain in the days to come. But it is a name that you should keep on your list to buy after the elections, specifically if we see a blue wave and massive stimulus spending. Moving on to another name we heard from in the morning, 3M. When you look at 3M, the results are not really that bad. Year over year, they managed to grow just by a little bit in terms of revenue and gross profit. Their margins are getting a little better, but the net income remains down year over year. And you saw the stock trading in the red today as well. Now, when you look at the growth by segment, right away you see that the growth for safety and industrial, we're talking about masks and PPE equipment, it makes sense that they saw a rise year over year. And you see the same thing happening to their healthcare unit, impressive gain year over year. So I am not very bearish on Triple M here. I know the stock is down, but looking at the results, contrasting those results with, say, Caterpillar, I'd much rather have 3M in my portfolio given the results. And let's move on to cover some earnings from the pharmaceutical giants we heard from today. Starting with the good, moving to the bad, and then the ugly. Here is the good. Merck. Their profit outlook increased, and of course, when we talk about Merck, we have to talk about Curituda. And the revenue for this drug, specifically the key growth for Merck, continues to increase, and the margins for Curituda continue to get better. Their oncology segment up 21% year over year. Very impressive, specifically for Curituda, given how big this drug got. When you look at their smaller drugs, they're also growing double digits. How about vaccines? This is the weaker spot in Merck's earnings, down 10% year over year. How about the hospital unit? Double-digit growth, 13%. And lastly, the pet drugs unit also up double digits year over year. When you combine the gains in the oncology unit and their hospital units, in addition to the animals health unit, that would offset whatever losses they had in their vaccines business segment. And here is the growth for Merck geographically. This quarter, they managed to return to growth across the majority of the regions, excluding Japan and Asia Pacific. And here are the results year over year in details. Right away, you could look at their sales numbers. They're only grown 1% year over year. That is not very impressive. But when you move down to their GAAP net income, it is up 55% year over year. Their margins are getting a lot better here. This is the story, and you saw Merck trading down today along with the rest of the pharmaceutical names. But if you're looking to add a pharma giant in your portfolio, Merck is the way to go. And now that we covered the good, let's move on to the bad. Here is the results for Pfizer. Pfizer has two major business units. The first is biopharma, and this unit outperformed as expected. Impressive growth across the board, excluding the Prevnar 13 treatment. The problem with Pfizer's results is their second business unit that they call the Upjohn unit. And this is a very interesting name, given the fact that Viagra is a part of this unit. But we see revenues down 18%, and regionally, they're down 20% in China. And look at this, Japan, the Celebrex treatment is down 62%. And of course, they're saying that the reason why their Upjohn unit underperformed is due to generic treatments. Generic treatments eating on their margins here, and you see the contrast between the biopharma unit, which has more patent, and the biopharma unit is the main driver for revenue and growth for the company. And here are the overall results for Pfizer. Revenue down 4%. You see the biopharma revenue overall up 4%, but those gains were offset by the massive declines in the Upjohn segment. And now let's move on to the ugly Eli Lilly. Right off the bat, we know that their drug trial for the COVID-19 treatment got stopped and the stock was already hammered going into earnings. And when we look at the results, they're not very impressive. And Eli Lilly, of course, tries to hide their year-over-year numbers because they're not as impressive as Merck and even Pfizer. And when you look at their key growth products, you see right away that the growth across the board is plateauing and actually curling down for many of the names. That is bad news for the company, specifically given where the stock is trading, and you saw the shares of Eli Lilly down over 6% today. Moving on to Sherwin-Williams. Paint. You like paint? You should, because the results are impressive. Sales up 5.2% year over year. Their profits and operating cash also up double digits year over year. And you saw the stock trading very muted today. The reason is that all of these good results are already baked in the stock price. And the question, where does the company go from here? I think that even though these results are impressive on paper, stocks look forward. And you saw that home sales are down and we're pretty much through with the home improvement and renovations due to the stay-home environment in the COVID-19 era. So personally, if I have this stock in my portfolio, I would fade it and I would take my profits off the table. Moving on to Harley Davidson. And of course, this company is doing abysmal. However, the shares were up double digits today, over 20%. So let's try and figure out what happened here. Right off the bat, the revenues are down, the profits are down. We know that. That was expected. The point here, we've been hearing news about Hog laying off workers, cutting costs. So coming into this quarter, what the market was looking for is margins. How are they doing in their margins? And that metrics improved a lot. And you saw the market rewarding shares of Harley Davidson today. Here are the specifics. You see that sales are down double digits in North America, down in Asia Pacific, and look at that, down almost 30% in Latin America. Are you seeing a theme here with the weakness in Latin America? Almost every company we cover, the numbers are down significantly in Latin America. So you can see that the COVID crisis hitting Latin America harder than any region in the world. The surprising rise for the quarter here is Europe, Middle East, and Africa, because sales were up 6.7%. Now, what really excited the shares of Hog today is the announcement of the electric bike, which they named Serial 1. I don't understand, why do we need electric bikes to begin with? What's wrong with your legs? And can you call it a bike if you're not actually pedaling? But who cares? Investors and algos are triggered by a new word. And this word is electric. If you got electric, your shares will go up. Electric is the new tech. Remember when you wanted to fool investors into throwing cash in whatever endeavor you have, startup or whatever, you have to mention the word tech all the time. Tech this, tech that. Their eyes will light up green. And the best example of that is WeWork. It is an office leasing company, but it managed to fool all these rich investors by using the word tech. So if you are a new entrepreneur, you want to get some cash from the rich, use the word electric. Coca-Cola could have had good results if they mentioned that they're releasing the new electric Coke. Moving on to the results from AMD. And here's a company that is growing on steroids, just like Twilio yesterday. We heard from Twilio, yet Twilio is down 4% today. AMD, similar story. The results are very impressive, but the shares are down 4% or so today. I mean, look at these numbers. Pick any metrics you want. Revenue, year over year, up over 56%. Net income, up over 129%. It doesn't get any better than this. AMD is massacring Intel. Jabs, hooks, uppercuts, you name it. They did a number on Intel right there. But the problem with AMD is they're spending over $35 billion to acquire Xilinx in a stock-only deal. That is bad news for AMD and it would dilute the value of the shares. If I have AMD in my portfolio, I will take profits off the table because A, they're overpaying for Xilinx, and B, this acquisition is not needed at all. AMD, with the results they have and the cash they can raise, they can innovate in-house and produce any products, new products that they want in-house. They need not to spend 35 billion bucks in equities value to acquire Xilinx. But this is a sign of the bubble. AMD doesn't have anywhere near the cash of 35 billion bucks. This is why they're doing an all-stock deal. We've seen a lot of these deals happening in 1999 and 2000, specifically Yahoo. Go back and look at all the acquisitions that Yahoo did in 1999 and 2000 and what happened next. Their stock price surged really high and they figured out they can acquire other companies and go on a spending spree without spending any cash because they don't have cash to begin with. They can just offer stock and acquire whatever company they want. They did that, and the example here, they made Mark Cuban a billionaire. They overpaid for his company, which was a failure eventually, and they gave him some stocks. Mark Cuban dumped them right away. This is the reason why Mark Cuban is a billionaire today. Just another sign for the bubble here. And the last bit of earnings, let's cover Microsoft. Going into earnings, the worry and the concern was the growth of the Azure business. So how did they do year over year? They crushed it. Azure growth is at 48% year over year. Yes, it is deaccelerating, but it is still growing. That was not it. You saw double-digit growth in the Office 365 commercial. Big gains there. LinkedIn, their other cloud services, Xbox, the Surface products, impressive gains across the board for Microsoft. The problem here is the stock price. And this is the reason why you see after the bill, Microsoft is pretty much flat, not going anywhere, even though the results are impressive. Because year over year, Microsoft shares are up over 50%. Are we going to run into this problem with the rest of the tech industry? The results are impressive in terms of earnings, but the stock price does not justify the run, and all the good news coming out of earnings are already baked in. Moving on to the heat map analysis, and right away you see that today the theme was the big boxes of tech, whether it's Microsoft, Apple, Facebook, Amazon, Baba, Nvidia, the Fangman names, excluding Netflix, did very well. And you saw a rebound here in CRM. Salesforce was down after the bad results from SAP overnight in Europe, but Mark Benioff came out and said, hey, whatever's going on with SAP is secular to that particular company. Don't look at us here. We're not having any problem in Salesforce. And you saw the shares rebounding today. We also seen outperformance for Zoom. When we have surging in cases of COVID-19, traders will revert back to the playbook from March, which is let's put our blindfold on and buy Zoom, and then we'll ask questions about valuations later. Not right now. We saw marginal gains in gold as well and copper, but that's pretty much about it. In the banking sector, you saw the results from Hong Kong and HSBC did better than expected, and you saw the shares rallying today. But other than that, it is a bloodbath again for the entire financial sector, specifically Wells Fargo, which dipped below the 2009 lows. Industrials getting whacked across the board, so did the healthcare sector with some exclusions in biotech and the diagnostics. We see pain in consumer defensives when it comes to tobacco and beer, and cyclicals when you look at hotels, casinos, cruises, even GM. GM outperformed last week. It is getting whacked this week. And of course, the performance of consumer cyclicals is tilted due to the existence of Amazon and Alibaba in the sector. Going back to tech, we see that Canon having another big day today on the heels of their earnings yesterday, and we see Uber not doing so well, down over 3%. And now let's add some color to the discussion and review the rotation trade. Right away, it is a no-brainer to see the stay-at-home stocks outperforming the reopening stocks. Notable outperformance across the board from Shopify and Zoom specifically. The notable laggard here is Netflix. You would think that Netflix will gain due to the rise of COVID-19 crisis, but that didn't happen. Investors went to Zoom, Peloton, and Shopify today. What's going on across the aisle? Lots of pain is what's going on. More declines for the airlines, cruises, hotels. You see Marriott down big. Live Nation got a downgrade today. The name is down about 5%. So did MGM Grand, Cisco down over 4%, Alta over 3%, and American Express, the bleeding continue on the heels of their very bad earnings on Friday. Coca-Cola is the name that managed to close in the green just by a tiny bit. And now, moving on to review some charts. And since the action was muted today, we will stick to the 15 minutes charts for the indices. And here is what happened. Right away, the SPY started trading in the green. However, the resistance that we've identified yesterday, 339.5, remains very strong. The SPY tried multiple times to break above it and sustain the break. That did not happen. When you see weakness in financials and industrials, consumer cyclicals, you're not going to see the SPY gathering any momentum. What about the Qs? The picture is a little better. We gapped higher straight out of the morning, facing the resistance of 282.30, struggled a little bit in the morning to break above this level, and finally around lunchtime the Qs managed to break above the resistance of 282.30. Going back and forth, we saw a bid happening at the end of the day, but all in all, the action remains muted. The only achievement for the Qs today is breaking above the 282.30 resistance, turning it into support. But it is not a definitive and a strong break yet. We could dip below the line by tomorrow. What's going on in the Dixie? Not doing anything yet. It broke support, it broke resistance rather, the 93 level yesterday, and overnight it dipped below it again, and we saw today by the end of the day the Dixie managed to climb above the 93 resistance, turning it again into support. We can't make anything from the action today. Inconclusive. We're just trading in range here, waiting and waiting for the results of big tech and the outcome of the elections. The VIX, another big day for the VIX, building on the gains from yesterday, and you see the breakout from the bull flag formation happening as expected. We could face some resistance here in and around the level of 35. Moving on to the last chart of the day, the TNX, the 10-year Treasury yields. We see more buying of bonds again today. We saw the ABC pattern, the bullish pattern taking place. When that is done, we saw declines continuing for yields. That shows an appetite to move towards safety right before the elections. Again, boring action when it came to the charts today. I wish I can spice it up a little, but it is out of my hands, so that's all we got in terms of the technical analysis. And now let's move on to conclude this video and preview some of the earnings we got tomorrow. Right in the morning, we do have UPS reporting, and that would have implications on another name that I'm watching closely, FedEx. FedEx ran really hot, and I started buying put options on FedEx today. If we see UPS slip, that could impact the results for FedEx as well, and you will see FedEx trading lower. It is a lot cheaper to buy options on FedEx versus UPS because the premiums for UPS are extended. We will hear from Sony right away, and we are looking and anticipating any announcements for the PlayStation 5. We're looking for the pre-orders numbers. We're not going to pay attention to their entertainment segment because we know it's going to be weak. This is the theatrical releases. But we're also looking to hear their long-term plans regarding their movie business. What are they going to do, assuming the theaters are going to be closed for longer than we expected? And we're going to have some pharmaceutical names, Gilead, Amgen, and General Electric, all reporting in the morning. Gilead is very important here because the FDA approving remdesivir, yet the World Health Organization saying that the drug is not effective. So we want to hear some commentary from executives in the morning. Teladoc, another hot name, reporting tomorrow. And we do have Budweiser, a name that we've been watching for a while. We want to see if there is any sign of a recovery, specifically after we reopen restaurants during the summer. And after the bell, we have also MasterCard and Visa. These two names will be very important, not just because of their individual earnings, but what they can reveal for the overall health of consumer spending in the economy, just like we did with Amex Earnings. We also have Etsy, ServiceNow, and Ford. Etsy and ServiceNow are high-flying names, and if they don't live up to the expectations, you could see huge declines in these two names. Ford is a different story. We've seen a lot of activities in the options market regarding Ford, and the action is slightly tilted toward the bearish side. Keep in mind that Ford is the number one stock held by Robinhood traders, and the question goes, when will Robinhood traders lose their patience with the name and start dumping Ford shares and say go and migrate to General Motors instead? Be very interesting to watch. Another day down in a very interesting earnings week, and we have 3 more days to go. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.